From the floor of the CME Group, this is Danny Riley on today's Cash Close. You already know how excited and mad I get about all this stuff. Not really mad, just excited. The name of this video is going to be the January options expiration and the S&P up for the first time in 6 sessions. The high of the day in the S&P came in at 2013.5 just now, or late in the day. The low came in at 1981.5 early. And last, we're 2012.80. We're up 23.7 handles. Total volume, 1.8 million minis trade. Make that 1.85 million minis trade, and 2.4 thousand big S&Ps trade in the pit. MOC, the MIM started showing 200 million to sell. I warned everybody about a flip, and the actual MOC came up by 250 million. Now, I got to ask you guys, what about that late Friday rip? We haven't seen one of those in a long time. But actually, I started about 11 o'clock. I started warning people. I said something about, remember what they did on the crude options expiration. Basically, if you weren't around for that, crude rallied $4 in about, I don't know, it wasn't even that long of a time on the expiration day. Next week's shortened economic calendar includes 11 economic reports, a very low number of economic reports, 2 Fed governors speaking, 10 T-bill or T-bond auctions or announcements, and the big thing is the European Central Bank will decide on the size of their planned sovereign debt purchases. This could be a very, very wild week. And to tell you the truth, you guys, I'm not sure everybody won't say sold to the ECU. Now look, I started talking about how all these big ups and big downs and all this kind of thrashing probably isn't all that good for the S&P. Now overnight, when the Greeks started talking about 2 of their banks needed a bailout, the S&P sold off down to 1970, and that was just 5 handles lower from the 200-day moving average at 1965. So you know what? I'm not sure if we completed that or not. That very well could be it. I don't know, but I think there's a lot more to come next week. Now, the other part about it is if crude oil continues doing its thing, it's going to be very hard for the S&P to grab any real footing here, even as we go into the earnings, which I think will help support the market. And then the last thing is that I want to say that, look, there's a lot of, I'll just finish it like this. There's a lot of moving parts going on here. And you know what? We're very early in the year. The S&P rallied 30% in 2013, basically up 9 or 10% in 2014. And you know what? It feels a little tired. It feels a little jerky. So MrTopStep is going to take a step back. I've said it. If I don't have a good feel for the markets, I'm just going to keep my mouth shut, and I'm going to leave it like that. I'll see you guys on Tuesday on the opening print.